Good evening and welcome to the 19th of November Audit and Corporate Governance Committee. Attending the meeting this evening we have Councillors Froggatt, Axel, Buckley, Carey, Marks, Parish and Warburton. Also attending we have officers from Warrington Borough Council and Grant Thornton. I'll now hand over to the Deputy Chair to open the meeting.
Item 1 is apologies. Do we have any apologies?
Yes, Chair, we've had apologies from Councillor Jan Hart.
I wondered if you could register Chris's apologies, basically due to IT breakdown.
Yes, that's fine, Chair. We'll register those and hopefully we'll be able to join shortly.
Okay, Code of Conduct, Declaration of Interest. Do we have any declaration of interest? No, move on to item 3, minutes of the meeting 24th of September. Do you agree them as a correct record? Yeah. Well, I've just got one comment that my name isn't on as having attended them.
That's fine, Chair. I've updated the minutes to record your attendance.
Okay, thanks. We move on to Standard Subcommittee to note the minutes of the 24th of September.
Right.
Okay with that?
Yeah.
Good. Item 5, mid-year Treasury Review. Report of the Deputy Chief Executive Corporate Services. That's you, isn't it, Linton?
Danny, you're just on mute. Danny, your microphone's just on mute. You just need to unmute yourself.
Oh, sorry, can you hear me now? Sorry, I'm having a few problems.
Yes, Danny, we've got you now.
What you've got in front of you, Chair, is the mid-year Treasury Review. It's a bit of a beast of a document, and what I'll draw out in the report are the key things. We've got a report at this degree of detail, largely due to the CIFA code and everything that we operate within. But what this report is saying, at the start of the year, at full council actually agreed the council's treasury management policy for the year, and this is how the council has, what this report shows primarily if we fulfilled and operated within the boundaries of the strategy since. And I think it's been one hell of a 6 months in terms of what's happened with COVID in the economy, and that obviously has had a major impact on the council's treasury strategy. But I'm pleased to say it is a very optimistic report, and Treasury's performed very, very well, and sort of within that period. If we can draw out some key highlights in the report, Councillor Froggatt asked before about the council's level of borrowing. So if you actually go to the table at the top of page 19, that shows that at the end of September the council had borrowing of £1.488 billion. Section 3 goes on really to give an independent review by Link, Treasury consultants, on the economic update, how the economy's performed and where they see things going in the future. Also, it's pleasing within the report, in section 5 deals with really the prudential indicators. So I'm pleased to say that we've operated within all the prudential indicators that were set by council in the period. One of the key tables, I think, following from Councillor Froggatt's comment early on, is the table of 5.6. So that shows the authorised limit. What the authorised limit is, it's the maximum amount really officers are delegated to borrow up to. It's governed by the capital programme, and again this is actually approved by full council each year in February. So as you can see, the current limit is 2.5 million, but we sort of estimate at the end of the year we're going to borrow somewhere in the region of 1.5, 1.6 billion pounds. Section 6 deals with benchmarks, so but we get SIFA benchmarking information, and as you see, the council's treasury management benchmarks are well exceeding that of local governments across the board. If I can just go on, one of the key sections I want to concentrate on is probably section 12 and 13. What we've got to report since the change in the code in 2018 is our non-treasury investments. So they're probably the commercial schemes that the council has sort of invested in over the last few years. So if I can just go through them very, very quickly, you know, I think in terms of Redwood Bank, yeah, you know, Redwood Bank has actually performed well during the COVID period and is really going from strength to strength. Our loans to registered social landlords, we've currently got about £700 million worth of facilities on our books with 190 million drawn down. We've been in contact with all the housing associations during the period. They've all paid, and they've all got very, very strong balance sheets, and all the indications are they will pay in the future. And just to give you some indication, the council's probably making somewhere in the region of £5 million per annum now from that loans portfolio, which we've been operating now. I can't believe it's so long, since 2009. A lot of good news to report. Thanks. On the housing company as well. The housing company is up and running. The council has invested, or will invest, 31 million in this, and the first 2 schemes are now on site to build 160 odd affordable homes, and those will be green homes as well. So they're, you know, they have the latest in green technology, ground sourced heat pumps, solar panels on the roof and batteries. So I think that will be a really good news story for the council when those properties are fully built in about 18 months' time. You probably all know about Together Energy. So I think during the period, Together Energy, there's been a lot of activity. Together Energy continues to perform well. During the period, it's obviously changed its supplier from BP to Ørsted, which is absolutely fantastic. They're one of the greenest energy companies in the world, a Danish energy supply company. And in the period, Bristol Energy have Together Energy have actually taken over Bristol Energy, and it's currently got a customer base around of about 250,000 people. Together Energy's just released, or will be releasing shortly, it's just closed its accounts and it's broken even for the first time, which is really a very good result for a growth company. And so everything seems to be going in the right direction. Together Energy does produce a positive financial return to the council. Last year it earned the council, we took about £650,000 from the company, and this year we're on target that it will deliver a return to the council of about £1 million. I want to concentrate on the property portfolio because there's a lot been reported in the press and about property, councils going into property, and we're all losing money, but it's not necessarily the case with Warrington. Our property portfolio is going from strength to strength during the COVID crisis. That's probably because it's, in terms of our strategy, it's very much looking to the future. We've been investing in things such as warehouses, supermarkets that have done very, very well during the COVID period. Not just in terms of return, I think in terms of valuation, you know, in terms of what we've actually spent on property over the last few years, it's 492 million, and the last time these properties were valued, and we do expect them to go up the next time they're valued, particularly the warehouse portfolio, which is very, very valuable. You know, it's currently valued at 503 million, so there is sort of a fantastic uplift in capital there, and we are making net somewhere in the region of £12 million from our property portfolio. The portfolio again has bucked the trend. Some fund managers have told us we should be working in the city in terms of the return that we're getting. So in terms of rent, we've actually corrected in 95% of all rents due during the last 2 quarters of the COVID crisis. So the property portfolio continues to perform very, very well. If we can just now go on to talk about some of our normal Treasury investments, and this is where we sort of invest our Treasury balances. In terms of money market funds, money market funds, they're really unit trust funds where we invest money overnight. The returns the local governments are getting now, because what's happened during the crisis, interest rates have dived to all-time lows. Some of these money market funds, now you deposit your funds and you get nothing back, or you're getting a return of 0.01%. And some of the funds, Lloyds have said this week they've shut several of the funds because there's too much money trying to be deposited in them. One of our funds, we've got a very, probably the safest fund on the book, is one an Altana bond fund, and we invested in that last year. That's probably the one that's gone down during COVID. All councils' bond funds were very, heavily hit, but it is actually on the way up. It's about 4% down, but we do actually expect it to be in surplus in the coming weeks. The CCLA Local Authority Property Fund, that was actually closed during the COVID period, so you couldn't actually draw any funds out, but they've since reopened the fund. But again, that's showing a good return of 4.66% yield. The council's got 10 million invested in that, which is currently valued at 10.6 million. We are invested in the local government association municipal bonds, and that's now started to burst shoots, really, because it's issued its first 2 bonds to Lancashire County Council in the period. The Public Sector Social Impact Fund, yeah, we actually launched that in March with 5 councils on board. The fund's operating successfully, but in terms of taking on new clients, I think COVID's probably put back its development by about a year. We invested in 2 small investments in an M7 property fund in the period, and again that investment is going from strength to strength and delivering a positive yield to the council. We also set up a managed account bond fund in the period, and again it seemed to be the right time to do it with COVID, more luck really than anything else. But that fund is yielding a return somewhere in the region of 4% at the moment, which is fantastic in terms of this background. And we also invested in the period a small amount of money in a bond, Liverpool Community Homes, to build an affordable green homes scheme in Liverpool, which is performing very well. Also, just to reiterate the governance, there is very strong governance in terms of DD around any investments or borrowing that we do. The Treasury Management Board carried on meeting in the period, and I think we did have the results of the PwC commercial review, whereby across the board there's some very good recommendations that we'll take on board, but across the board it was a very strong report, Chair, and I'm happy to take any questions that you've got.
Right, any questions on the report?
Yes, Chairman.
Yes, okay there. Go on, Ian.
Oh, okay, thanks. Yes, I've got several. Can I I'll just do 2 to begin with. The first one I want to raise, I just need to understand this. If I could take you to page 23, 3.18. The final sentence says, "It is clear HM Treasury will no longer allow local authorities to borrow money from the PWLB to purchase commercial property if the aim is solely to generate an income stream." I just wondered how that squares with some of the things that we've been doing. That's the first one. The second one is just a small point. I just need clarification on numbers. If I can take you to page 26 and 27. On 26 in 5.2, in the total capital expenditure line, which is the 3rd one from the bottom in the table, the final number is 371 million, well, plus other numbers. On the other page, the top line, which I would have thought was the same, it says 534.967. I just wonder whether that's a typo or whether I'm missing something. If I can come back with the other questions afterwards, please.
Yeah, okay.
Let's pick those up.
Yeah,
Chair. If I can pick those up, in terms of the PWLB, the government had a consultation this year which shut in July. So what the PWLB are proposing, there's been a lot of there was a report done by the National Audit Office early on in the year which said, councils have done £6.6 billion worth of borrowing over the last few years in commercial property. The bulk of that was funded from the PWLB. So what they're proposing to do, the consultation was, in effect, what they want to do is actually stop borrowing from the PWLB, whereby councils can no longer invest in commercial property. And they've not said that councils can't invest in commercial property. What they've said, if councils want to carry on investing in commercial property, they've either got to use their own resource or borrow from another source. To date, they've actually not they've not actually said whether they're going to make these recommendations, but we are expecting that they will that they will report on this with the spending review, which is due out on the 25th next week. I think sorry, I haven't had a chance to scroll down with the page numberings, but I think what you're talking about is a typo, so I'll go in a few minutes and have a look and come back if I need to explain that one. No,
if it is a typo, Danny, that's fine. I think it must. Yeah. I just wondered if I was missing something.
Yeah. Can I just pick up, Dan, about the PWLB? And from what I understand from the papers, you could borrow instead from the municipal bond fund.
Yeah, I think councils, I think what's happening now, since the 1% was put on the PWLB is no longer competitive either for commercial property or probably from a normal capital programme. So what we found during the summer, a lot of councils have started to borrow from the Municipal Bonds Agency, but they've also been raising bonds themselves through various organisations. Sutton, who's a council in London, did a bond through Link, our Treasury advisors, for 250 million a week or two ago, and Hartlepool Council announced yesterday that they've just issued a £30 million bond through trade risks. So I think the landscape is changing, because regardless of commercial property, the PWLB, if you're borrowing large amounts of money now, is not competitive with it charging 1.8 above gilt.
So the returns from the municipal bond are favourable, are they?
Yeah, the returns from the municipal bond, you can borrow, are much more favourable than through the PWLB for any type of borrowing, whether you want to use that for commercial or to do general capital programme schemes.
Does that compare with the PWLB historical rates?
But I think it depends what you mean by historical rates. If you went back 18 months, I think a bond issue would beat the PWLB rate. But what the PWLB did to stop commercial borrowing, they put 1% on the rates. So with that 1%, you're inflating PWLB rates. So I think if you look at the Sutton bond, they borrowed roughly a 1.7% for 25 years. If they would have borrowed that from the PWLB, they would have been paying 2.7%. So it's a percentage point more. So if you take that on 250 million, it's probably a saving of 2.5 million.
So it's favourable then.
Yeah, I think at the moment, it is very much favourable. Yeah. Whether things will change next week, I don't know, when they announce the PWLB review.
Do you want me to finish this item, Chris? Then you can take over.
Yeah, carry on.
Can I ask a question just regarding, I suppose it's to do with council and investments generally, Danny. I think from a layperson's point of view, you're doing a fantastic job, and I'm just wondering what the difference is between Croydon, that's happened in the last week or so with Section 114, and Warrington, and can you reassure members and other people of the differences really between Warrington's strategy and other councils' strategy that don't appear to be working as well?
Yeah, I think if you read the report, I think there's many reasons why Croydon failed. I think with all these failures, if you look at Northampton, it all comes down to poor corporate governance primarily. So, in terms of its investments, if you take one of them for example, Croydon bought a hotel. Nothing went to members. They bought the hotel at 24 hours notice. I think primarily they actually did it on an income strip again, which is absolutely ridiculous. So in terms of the stuff we're investing in, it takes us months even to bring a report forward. Some of the things we work on, we work on for 18 months. So I think the difference between Warrington and Croydon is that we do have very strong governance. I think what's been said this evening, it's the reason we commissioned the PwC report. We are doing new things, councils, in terms of commercial things, and what governance is. It's an ongoing thing. We need to constantly improve. But I think we do take governance very serious in Warrington, and we do have very strong governance. I think another difference between us and Croydon as well, we do have a good reserves base as well. I think one of the reasons Croydon had to issue the 114 notice that it didn't have any reserves left to do anything, and I think it also had very poor strategic plans across the board. So to me, I think they're the reasons why Croydon failed, but it's sort of very different to Warrington. To me, it all comes down to governance. If you've got good governance in place, it does stand you in a good position. And we do have a good strong. It's very difficult for local government financially at the moment, but we do have a good strong. We do have good policies, and we do have good strong capital planning and medium-term financial planning. I don't know if you want to add anything on that, Linton.
Linton, are you with us?
I am, yes, thank you, Chair, Deputy Chair. No, I don't think I need to add anything to what Danny has said. I think he's covered all of that. It's unfortunate where Croydon have found themselves, but I think part of it's the commercial review that we wanted done, that we'll be bringing back the action plan to the next meeting from PwC. It reflects a number of the things we've got in place from a governance point of view, that hopefully we wouldn't end up in that kind of position that Croydon have found themselves.
Are you reassured, Paul?
I'm very much reassured, and thanks again, Danny. Yes.
Thank you. No indication for any more.
Yes, Chair.
Questions?
Chair.
Yes.
The hand up thing doesn't seem to be working, but Councillor C. Parish, it's one of the peculiar things, of course, that it sounds like we're taking more risks, but the more investments we've got, the more it's diversified, which if anything, sooner or later something might go wrong, but at least we've diversified, so the impacts will be spread. I'm thinking particularly of Luton, of course, who had the misfortune to buy their own airport. I think it was £40 million, was it? And just before lockdown, and the collapse of basically profits from airports. So yeah, the diversification does seem peculiar. Although it borrowed a lot more money and a lot more investments, that does mean the portfolio's fairly diversified.
I assume that will be reflected in the strategic risk register, would it, Dan? The diversification.
Yeah, I'm not quite sure what it's on the strategic risk register. I don't know whether you want to comment on that, Jean, but we do have a Treasury risk register, so it is sort of covered. But I think it's like anything else. I think it's one of the reasons. It's a valid point, Councillor Parish. With any investment portfolio, you need to be diversified. I suppose the issue with Luton, they never seen it coming. It's the same with the GM authorities. Manchester have lost £60 million worth of dividend from the airport this year. Well, they never saw this coming, because prudently, they should have been putting something aside into reserves. What we do have in Warrington, if anything did go wrong on any of these investments, we do put a proportion of it to reserves each year. So we've got a Treasury management reserve that currently stands at £5 million. So if one of these investments depth, you know, in the good, you know, when we're making good, we do put reserves very prudently into that, and we do the same on the property, and we've got a £10.4 million property reserve. So if someone didn't pay, you know, we do have enough really to mitigate that for a year or so while we sort those problems out. So I think again it all comes back to prudency, diversification, and being sensible and good governance.
That's more reassurance for you.
Chair.
Yes, Ian.
Yes, thank you, Deputy Chairman. A couple of questions on Together Energy, you'll be surprised to know. I'm just trying to work out about this percentage green energy, because I look in the minutes of the last meeting and it says the company also provided in the past 100% green energy. I look at 12.4 on page 41 and it says the aim of the partnership is to purchase 100% green energy. It's actually got this rather strange phrase, to reduce fuel poverty in Warrington and the neighbouring residents. But then if I look in a sort of national table, which I've got for percentage in renewables, under total energy, admittedly it's for 2019, this may be the answer to my question, the figure is only for renewables 8.9%. Now, it may well be that since then, since they've moved to Orsted, it's actually gone up to 100%. So I just wondered, is it at 100% now? I mean, it appears to be an 8.9% in the past. So that's my first question. The second one, yes, I'm pleased to see that it's break even. I'm assuming this is break even for the year that's just passed. But again, I'm a bit confused about what year, because in 12.4 in the last sentence, it says have recorded a break even position in their 2020-21 accounts. So one wonders whether that's the forecast or again, whether it should be the 1920 accounts. And I'm also pleased to see that the gross margin has gone up, but I trust that the movement, which I saw reported in the Warrington Guardian, from 2.5 to 5.1% gross margin, is on a like-for-like basis, because I'm just a bit concerned whether any of the costs might have been reclassified, so strictly that increase isn't quite what it appears to be. Thank you.
Yeah, I think I actually tried to try my best to answer those. Yeah, I think the 8.9% comes from for when we first took the company over. I think at the time the contract that Together had with BP, the BP would only supply them with 8.9% green energy. When we actually took the company over, BP gave the guarantee that they would supply 100%, which to my knowledge, when we took the company over, we were getting 100% green energy. I think the difference between Orsted and BP, obviously BP comes with a lot of baggage that primarily they're an oil company. What Orsted has, it does have the generating assets, so it's got huge wind farms and God knows what in the North Sea. So all the power to my knowledge that's going into Together Energy now is actually, we can trace it back to fully sort of renewable sources. You know, it's not Together Energy paying a recall whereby you pay you pay an energy company money that goes to the government and they actually say it's green because that money will be invested in green schemes. So it is actually 100% green. It is actually a typo, that, my apologies. It should be the 1920 accounts, because Together Energy's year end is actually the 31st of October, and it is actually like for like sales. We do get independent financial reporting on Together Energy, so we use a company called Camdor Global to monitor this Together Energy on a monthly basis. So they do supply us with independent monthly reports, so it is a like for like figure.
Okay, you okay with that, Ian?
No, yes, no, that's okay. So we can assume that it is certainly 100% now and has been for perhaps unspecified time in the past.
Yeah, yeah.
Okay, thank you.
Chairman, Deputy Chair.
Yeah.
Couple of questions. We're collecting 95% of rents. What does the 5% that we're not collecting represent in cash terms? And what's the latest position with Travelodge? Because hotels have had a pretty hard time over the last 8 months because of the lockdown. So there's two questions. How much rent aren't we collecting in cash terms? And what's the latest position on?
Yeah, I think in terms of what does the 5% with the way we financed how this will work out, the last figures I've had from the property team, so I think the 5% equates to about we're probably going to be down by about 600,000 this year. I think primarily you talk about Travelodge. Yeah, Travelodge is actually issued a CVA across the board, so all councils and big hedge funds that have got Travelodges have been hit by this. So what that means is that they're only going to pay us 80% of the rent going forward. But I think to try and mitigate this, they have extended the lease, so we do have Travelodge on a longer lease, but they are only actually paying sort of 80% of the rent going forward. I think there are some positives as well in terms of the companies that have not paid, because one of them was Pound Stretcher. So what's happened with this Pound Stretcher in Hume in Manchester, the Asda site, they've actually vacated the site, but we've replaced them with B&M. So B&M out on a 15-year lease. So B&M are one of the fastest growing retail companies in the UK. So we have actually, we've foregone a bit of rent on Pound Stretcher, but we do have a much stronger covenant now in B&M, who are also paying a higher rent. And what another reason as well for the you probably know the DW unit as well in the centre of town. DW actually went into liquidation, but perhaps we did actually buy that site. Perhaps it's a bit of a wrong classification. That is probably not really an investment property, because in the first place we actually bought it for its regeneration value.
Are you okay with that, Brian?
Yes, thanks, Tim.
Any more questions? No?
No question. Can I just make sure that you sign me in? I had trouble getting on. This Diana friend. I had trouble getting in. I'm not listening in on the phone. I just want you to note I'm here.
Okay, that'll be noted, Diane.
Thank you.
We move to the recommendations. First, that we note the report, and second, that we approve the report to be presented to full council on the 7th of December. We all in agreement to that?
Yeah.
Yes.
Yeah.
Yes.
Oh, the reins over to you now then, Chris.
Okay. Thanks, Colin, for
had
a little local difficulty there, but we're all right now.
Good.
We go on to Simon now, item 6, anti-fraud, bribery and corruption update.
Okay, thank you, Chair. I normally bring a report to committee about this time of year, which reports on the work that the counter-fraud unit have done during the year so far. But what I thought would be useful this time as well would be to add in some background on the work that the council as a whole has been doing to manage the fraud risks that have arisen from the current COVID situation. So obviously, as I'm sure members are aware, central and local government have provided an unprecedented level of support to businesses and individuals over the last 6 months to keep them going during the various lockdowns. Obviously, this amount of money that goes out will, by its nature, attract fraudsters. It might attract opportunist fraudsters or even organised crime gangs. So we have to manage those risks in terms of the amounts of money that we give out. Actually, the list of support that's been provided that I've included at 3.3 is actually out of date already, because from the latest lockdown, we're also issuing local restriction support grants and additional restriction grants. So that's even more money going out. But certainly in the first batch of lockdown, the council itself issued over £37 million in terms of business support. So that has attracted a number of fraudsters nationally to these schemes, and they've more generally tried to take advantage of the situation in terms of scams against the public and against our service users. So at Appendix 1, I've just set out some of the most common COVID-related frauds and scams that have been identified. And quite a lot of these relate to services that the council provides itself, or that might affect the council service users. So, for example, schools have bought PPE from a bogus site and then they've just made off with the money without receiving any PPE. I've also attached at Appendix 2 some of the key risks that local authorities face in the current pandemic. So we've actually taken those risks to the council's corporate governance group. So we're looking at measures to raise awareness about those risks within the council and mitigate those risks. But what I wanted to focus on with this really was just to provide some assurance to members about those business support grants that we've been providing over the last 6 months. So at 3.9 to 314, I've set out in a bit of detail what the council has been doing to mitigate those risks. And obviously there was an imperative to get that money out as soon as possible to businesses because they were in need, they were desperate for that money. But we did also have to make sure that we were only giving the money out to those that were actually entitled to do it. So what we've been doing is taking a balanced approach between getting some checks done before the money goes out, but also doing some post-payment checks, and then following up where they identify that there might be potentially fraud or money claimed that shouldn't have been claimed. So when we look at this, and we do liaise quite regularly with authorities nationally and in the region, we find that the number of claims that we've identified as either potentially fraudulent or made in error is actually quite low. I mean, we've had 9 cases referred to the counter fraud unit for further investigation, and talking to other local authorities in the region, that seems very much in line with the number of cases that they've had. So I think that gives some assurance that our procedures are as good as any in the region. We do have a post-payment assurance plan in place to look at any further frauds or ineligible claims. We do follow up on them. So some of the cases that we've looked at, we've either recovered all or part of the money, or we've prevented the money from going out in the first place. So I think certainly if you compare those sorts of figures as in the context of the total number of grants that we've actually paid out, for example, you compare it with what the National Audit Office have estimated as potential loss to fraud and error from things like the coronavirus job retention scheme and the business interruption loans and the bounce back loans, it certainly compares very favourably. And I would certainly say that it shows that local authorities are able to work together within the services within the council and also between councils to identify these frauds and shut them down before they happen. Just in terms of the actual work that the counter fraud unit has taken on, so for quite a fair time of that 6 months in the first initial lockdown, the counter fraud unit were actually more or less permanently seconded to help out in revenues and benefits, do some of the extra council tax claims, do some work around the business support grants. But we have actually managed to carry on doing our normal workload. So in section 4, there's a summary of the work that the counter fraud unit's done in the year to date. And it's pleasing to note, you'll see in the table there, that although we probably did lose about 3 months worth of work to supporting the business loans and other things in the pandemic, we have actually delivered a similar level of outcomes as this time last year. So we've achieved about £250,000 in cashable and non-cashable outcomes in the year to date, compared to just under £500,000 for the whole of last year. So that's mainly resulted from us focusing on various sort of key risks. So although we haven't managed to do as many cases as we did last year, we focused on some of the high value ones and some of the key risk ones. So we've had some good outcomes across the board in all of the areas that we look at. We had actually started to do some more proactive work at the start of the year, just before the lockdown, looking at areas that we haven't looked at for a while before. So we were getting reports on some of the various council tax exemptions, for example, in relation to empty properties, student occupation, properties unoccupied. So we started looking at some of those, and we've managed to carry on doing some of that work in the last 6 months. So we are starting to get some outcomes from those pieces of work, which I've included in the table above. So those are the main things that we've done. I've just mentioned at 415 and 416, it's really just to reiterate the point that we do work very closely with other local authorities in the region and also nationally. So I'm involved in a couple of groups at the regional and national level. So we do share information and intelligence on the fraud risks, whether COVID related or otherwise, which does help us to identify what our key fraud risks are and put some good control measures in place. So really, in conclusion, we've managed to carry out a good level of counter fraud work during the year, whilst also making sure that the COVID business grants have been issued only to those that are entitled to it. So I'm happy to take any questions on the report.
Okay, thanks, Simon. Are there any questions or comments, please?
Could I ask a question regarding the positive outcomes in 4 cases in 3.13, Simon? Could you just expand what the positive outcomes were?
Yes. So for the 4 cases we had, there was one where the grant wasn't paid out in the first place because it was identified that the business, the applicant hadn't provided enough evidence to support their application, so we didn't think that they were genuinely entitled to it, so that wasn't paid out. There were 3 other grants that we recovered the money from. So one of them, they weren't actually trading at the eligible date. There was a particular date they had to be trading at. There was another business that wasn't trading at that date as well. And then we had another case where there were actually 2 different businesses who were both claiming occupation of the premise at the eligible date. So in those 3 cases we recovered the money, and in the other one we didn't pay the money out in the first place. So that totaled that was £55,000.
Okay, not an inconsiderable amount then. Thanks very much. Thank you.
Anybody else? Okay, the recommendation is that we note the report. You happy with that?
Move that,
Yes.
Chair.
Yeah. Okay. Thanks.
Right.
Thanks, Simon.
Okay, thank you, Chair.
Okay, Jean, it's you for the next 4 items, I think.
Thank you, Chair. Just make sure you can hear me okay before I start going through the reports. Is that okay?
I can hear you.
Okay, that's great. Thank you. So the first report that I'll bring to you today is the report from the Redmond review that was done into the effectiveness of local audit. And it's just for information really, but I've just highlighted some areas just to bring to your attention as part of this. So the review covered the arrangements in place to look at council's financial reporting, and also the external audit of councils as well. And one of the key conclusions that came out of this was about the complexity of some of the financial reporting. So the review recommends a simplified statement of costs so that taxpayers can really understand and be able to measure the performance against of the council's achievements. At section 4, I've listed the recommendations that came out of the review, so I'll not go through all of these, but I'll just pull out some of them. The first one there is about a new body to oversee and regulate local audit, an Office of Local Audit and Regulation, and that would take over the arrangements that are in place currently, so public sector auditor appointments, and those other areas that I've listed there, quite a few different bodies to transfer it into that new body. And then another consideration was, and I think it's one we've discussed with Audit Committee when we've done the self-assessment, is about having at least one independent member on the Audit Committee. That was one of the recommendations. Also, at number 6 there, under the External Audit Regulation, we've got about review of current fee structure. So making sure adequate resources are deployed by the external audit assignment. Looking at potentially, number 8 there is widening the net really for audit firms who can get involved in external audit work. Number 9, it's an interesting one for internal auditors. It's about external audit recognising and being able to rely again on some of the work that internal audit do. That's probably been reduced in recent years with the Code of Audit Practice. And the deadline for publishing accounts to be extended. I think everybody's noted over the last couple of years that the bringing the deadline forward created a massive amount of pressure in the system. So it's proposed to extend that to the end of September again. Looking at financial resilience, number 17. A review of the current framework for financial sustainability for local authorities is proposed as well. And then under transparency of reporting, I think as we said about one of the main points, 19 through to 22, is this standardised service statement. and costs, and making sure that's produced on an annual basis, and that again will be subject to external audit, and how we communicate that to the taxpayers. I think the response there, and there's been a response from the audit firms, and there have been queries about the resource implications of the new body. They're looking at approximate amount of about £5 million per annum, and you'd obviously have staff transferring over from public sector auditor appointments. And so Tony Redmond's been quite clear in his trying to say this is not the Audit Commission being brought back to life. It's not a comparison to this new regulatory body that he's proposing. One of the section 5, one of the conclusions of the report was that the current external audit fee structure isn't really allowing the external auditors to fulfil their role, and I think that's probably been recognised, certainly from Warrington over the last few years, with all the complexities around some of the commercial activity. Is really to be able to spend the time to be able to look at that would need extra payments to the external auditors to do that. So that is probably something that will come out of this, that it will cost us more for the external audit review. That's just a brief summary. I mean, I can try to take questions, but it's really just for information, and the link to the full report is in that paper. Thank you.
Okay, thanks, Jean. There's some noise in the background. Can members make sure they're muted as they're not speaking, please?
Chairman?
Okay. Right.
Just picking up on consideration being given to the appointment of at least one independent member. Well, we have considered it, but we've not got one yet, have we? Where we're up to with it?
I know it was one of the actions from the self-assessment process, so it was one of the actions there. But where we're up to, I'm not sure where we're up to with that at the minute.
The problem is we're not allowed to pay them other than expenses.
And is there an issue with public indemnity insurance for somebody who's, taking a role like that and giving us advice?
Yeah.
Because I presume you'd need somebody you're looking at for somebody who is professionally qualified. Can I raise, Chair? I mean, the issue of not reviving the Audit Commission. I can imagine that the government that abolished the Audit Commission would probably have told Mr. Redmond, Redmond, don't try and revive the Audit Commission because we're not going to allow that.
Well, as far as I'm concerned, they are. Just find a different name, that's all. Eric Pickles springs to mind, and I wish he wouldn't, but there it is. Anything to add to that, Jean?
No, I haven't. I mean, when we look at that new body and the way that's set up, it probably would bring together, some disparate roles. And I think that was one of the things that came out of local audit and all the discussions at the beginning was there are still a lot of different bodies that have a little part to play in a big picture here. So I suppose if they bring all that together, that is probably different to how the Audit Commission was set up, because it is that oversight role. The Audit Commission had a little bit of commissioner and provider because they did provide some of the audit services as well. So there wouldn't be any of that in the new body. So it probably is different, but I think, as you say, to a lot of people, it does look like we're reinventing something that was there before.
Well, we can only watch this space. Thanks for that. Are you happy with the recommendations and no?
No, Chairman, can I speak, please?
Yeah, why? Okay. Yes, Ian.
Yeah, no, it's the same point that Colin raised about this independent person. Now, I heard the response to that, but I feel it's all left a little bit hanging. I feel that we ought to sort of seriously look at this. It may be that it's difficult. I mean, Steve mentioned a reasonable point, but I think we should look at this seriously and come up with a conclusion about whether we should move it forward or not, because it strikes me as a sensible idea in principle, although there may be some practicalities that we don't know about, and the payment is an issue. But I mean, we have outside people on some other bodies, whether it's scrutiny or whatever. I just feel that we should look at it rather than just sort of sweep it away.
Okay. So we'll look at it then. Okay, next item is yours as well, Jean.
Chair, could I just ask regarding the equality and diversity impact assessment part 7.1, and the report recommends the optimum means of communicating to council taxpayers, and I was wondering what steps the council could take maybe to improve the communications with the public, particularly in light of the investment strategy that we have, and reassuring them that what we're doing is in the best interests of both the residents and the council in the long term.
Can you answer that, Jean?
I can't. Danny, can you answer anything around that about being able to put out that information? Is Danny still with us? I could take that back and just ask the question. I probably can't answer that at the minute.
Yeah, sorry, Jane, I'm still here. What was the question? Sorry, I'm struggling to hear. It's not the best. If you can repeat the question.
The question was basically, what does paragraph 7.1 mean?
Danny talks about equality and diversity, and the Redmond report recommended that the way we communicate, and they're talking about the accounts here and financial information to taxpayers so that they can, you know, access the information more easily. Yeah,
I think it's the same old chestnut that's been going for about 20 years. I think primarily, you know, attempts have been made, but local government accounts are just so complicated. You know, there's about 2 people in each organisation that understands them. So I think what they're getting at is that they need to simplify them. But I don't know. I think they say that every few years, and there's an attempt to simplify them, but it's a very, very difficult thing to do.
Well, perhaps we could write to the new body when they set themselves up and ask them to address that.
Yeah.
Because for each local authority to set up their own way of standardising, you think there'd be a national standardised method. So they can probably do that. The new pseudo audit commission as one of their first tasks.
Yeah, I think the key thing, you know, what we do, it's the narrative report. We try to make the narrative report as simple as possible. So if you were reading the accounts, that really for the layperson is the thing to read. Otherwise, you don't want to be confused. And, you know, with all statements of accounts, you don't want to be confused as soon as you go into them.
Yeah.
Chair, if I may just jump in just on that point, my understanding is SITFA are leading the work in terms of producing that standardised statement. I believe that work is ongoing. We've not seen sight of that yet, but I believe it's SITFA who are taking that forward.
Okay, well, we'll see what they come up.
Thank you, Chair. Chair Steve Parrish, just looking at the terms of review, terms of reference for Sir Tony Redmond, and the officers might know it, but it might be useful just to understand what he was asked to do, and have the financial savings from the reforms been realised. I mean, you've abolished one quango, you're now opening another. Is there a more accessible audit market? Has there been an increase in audit providers? It seems to have reduced. So it'd be interesting to have I've not read the full report, be interested to see how he's answered those questions, really, that he feels it is necessary to have another body formed.
Yeah, well, I think I've already said somewhere else that he's recommended that he move the reporting dates to September. That can be done by a stroke of a pen, so we'll know how much clout this chap's got if they actually do that. If they ignore that recommendation, then there's nothing left.
Yeah, no, I think in terms of the cost of a new audit commission, I think what the quote says, the audit commission in its heyday, I think, was costing the taxpayer about £80 million. But what he's recommending, that the new body should be set up at a maximum cost of £5 million a year. Well, that seems a bit low to me, but that's the recommendation of the report.
But that's plus all the cost of the external audits.
Yeah, the cost of the external audits would be on top of that. Yeah, that's just for the body really to administer all of this. Yeah.
How close is all that to 80 million?
Yeah, I would imagine it would grow very, very quickly to 80 million. Yeah.
Yeah. Okay. Thank you.
Okay, we've had enough fun with that, have we? Okay, shall we press on, Jean? Next item, please.
Yes, the next item is the annual governance statement. And you saw the draft version of this document at the meeting in July. There hasn't been any changes at all to this final version. What happens with this is it does accompany the accounts. Obviously we've not got the accounts at the meeting as yet, but we wanted to bring back this finalised version of the annual governance statement because this is the position that we see at the minute. So it does recognise in here that the accounts haven't been presented as yet. But as I say, there haven't been any changes. So really, it's just for information to say at the minute, this is the final version that we are intending to include on the website. Just happy to take any questions.
Are there any questions? As Jean says, this is the final version, unamended, of the report that you saw in June, I think it was. So any questions? No, thanks, Jean. We'll go on to the next item.
Okay, thank you. The next one is the progress report for internal audit. So this is from July up until the end of September. This one just pulls out all the work that we've been doing over that period. I'll just go through some of the highlights. I'm not going through in great detail, but on page 1 of the actual report and the management summary, I've just listed there some of the work that the staff have been continuing to do to support the response to the pandemic. Simon covered some of this in his fraud report, but we've been working with the revenues and benefits team in the administration of the small business and the retail grants. Working with housing benefits, the fraud team have been heavily involved in that, and obviously we're still working now with the new grants regime that's come into place now with grants to businesses and so on. So a lot of work around that to support the organisation. And then obviously we've got the detail in the Appendix D on this report, and that's based on the draft plan that we brought to you earlier in the year. I'm just going to come on to the finalised version of the plan. But what we've done there is we've been having discussions with senior management teams to make sure when we came to finalise the plan that the work is still, viable and we can do that work working in the present arrangements and so on. One of the key things to bring to your attention at section 3 under KPIs, we still have managed to achieve the percentage targets at the end of Q2, and that's mainly because of our general grant work as well. So there's quite a lot of grant work in the audit plan as well for this year, and that work we have been able to continue with during the year. So the team have done a good job there in managing to continue some of the work as well as the assistance work that they've been providing. But obviously some of the other work's been impacted, so we've not been doing follow-up work, and we've not really sort of got many reports out at this stage, as you can see. At section 4, this is a key area I just wanted to bring to your attention, because there is a public sector internal audit standards advisory board on the back of the standards that we have to follow, and because of the pandemic, they've just issued some guidance and key steps that they think internal audit teams need to comply with to make sure we're still in compliance with the standards. So I've just set out the actions there that they recommend, and I've shown our sort of self-assessment against those actions. So that will provide some evidence as well for our external review when that comes along the line that I'll talk about in a little bit. So that's just for information. There are 2 reports on Appendix A. One of them is a limited assurance opinion, but the first one was an overall satisfactory assurance opinion around capital project governance. And I put this on the agenda because it was a key review. It was overall satisfactory opinion that we gave for the overall capital project and how that's developed and the programme and so on, and the monitoring of that at an individual directorate level. But similar to the review that PwC have concluded, we said that the process for reporting against the overall programme could be improved, and there could be further information provided around key issues and risks, and that would allow for more strategic oversight. And we've also brought out about monitoring key issues and risks. Whilst at an individual project level it seemed to be satisfactory, it's that escalation up to SLT and members and CIPG, we thought there was scope to improve that, and again that ties in with what we heard from the PwC report earlier. And the other report is around Mosaic and payments for adults services, and that one was a limited assurance opinion. The review looked at providing assurance around payments to service providers to make sure they were in accordance with approved contracts. And there are some significant areas around that. It had already been acknowledged, I think, within the council that there were significant issues ongoing, payment discrepancies and queries and so on. And there was a lot of work already going on to look at all of this. There is a Mosaic Finance group in place to look at the issues and risks involved in this, and this is just added to that work that was already in place. So that's the progress report. I'm happy to take any questions.
Okay, thanks, Jean. Are there any comments or questions, please? No. Yeah. Okay, Jean. No. Did someone have something then?
When will with the Mosaic, how long will it take for things to be resolved? You know, this working party and various things. You've highlighted quite a few things that are issues. So can you give a little bit more detail about that?
Yes, we have got an action plan for the full report, and there are dates attached to all of those actions, but it is quite a lot of that is work in progress, and the Mosaic working group and the oversight group are pushing a lot of those actions through. So I would have to go back to the detailed action plan to get to the dates for that, but I can provide that information if you want me to provide it outside the meeting.
Okay, happy with that? Okay, we'll note the recommendations then, shall we? And then press on, Jean. Next item, please.
Okay, thank you. And the next item is the finalised version of the audit strategy and the annual plan. And just to bring this to you for a review and comment and so on. So it came in a draft version. We brought that earlier on this year. I think it was at the June meeting when this came through. And obviously, to get to this final version, we've had to do quite a bit of work with the directorates just to make sure that it is still a valid plan. Those areas are still the priority areas, and also that it's practical to do some of these reviews. So what we did, we've had meetings with all the directorate management teams, again, to just go over the areas in the plan. There's been a little bit of changes, but not that many really. You know, there's not been any major changes to the plan. Just set out what we said was in the cover paper there at 3.3. There is more work on the plan that we can achieve in the remaining months of this financial year. It is still a 12-month plan, this. So we've said, well, we've just confirmed that all that work is still relevant and it's of value, it's still priority. So some of this work will most likely fall over into next year's plan. Just a small number of changes, as I mentioned. There's one review that was deferred in Families and Wellbeing Directorate and one new review added, and we've done that review. That was that is ongoing at the minute. It's the interface between children's social care and early help. We've looked at the days for a small number of the reviews and changed some of the days around. All the changes are highlighted in Appendix A to the plan, and we'll carry on progressing through the work this year, but obviously with a view to the calls upon resources again, for instance, like this recent grant work. You know, we're trying to get through the plan as much as we can, and certainly prioritising some of the financial reviews. But we will obviously still react to some of the other requirements. The other thing we're trying to do is look at data analytics, to maybe use the interrogation software that we use to look at some of the financial systems and so on. So that's where we are. I mean, I'll not go through the strategy document itself because it's basically the same as the document that you saw in June. And as I say, there aren't any major changes, but if you have any questions, I am happy to answer them.
Okay, thank you, Jean. Are there any comments or questions? You're all happy? Happy to move on? Yep. Thanks, Jean. Next item, please.
Thank you. The next two items are really just for information, and these are documents that come to you every year. So the first one's the Internal Audit Charter, and it obviously came to committee in November last year. Very little changes to this document at all. It's in line with sort of a model charter document that was produced by the Institute of Internal Auditors, and when they updated their model charter, we did those updates, but that was done in January 19. So for this year, the charter itself as it stands, there are very little changes to the one that you saw last year, and it basically just sets out the purpose of internal audit. And the role of internal audit and so on. I'm not going to go through in detail. It is a useful document. It just gives you the, you know, how we approach our work and the standards and how we have to work in line with those standards. It also notes some of the sort of consultancy work that we do, and it sets that out in the table there under section 8. So it is a useful document, but I'm not going to go through in detail, but I'm happy to take any questions.
Thanks, Julia. Are there any comments or questions, please? Okay, Jean, last one.
Okay, thank you. And the last one, as I said, again, is just really for information, and this is the Quality Assurance and Improvement Programme. And again, we bring this to you every year. It's designed to make sure there's assurance that internal audit performs in line with the public sector internal audit standards. Very few changes to the document, again, as same thing with the charter this year. I think just to bring to your attention with this is we have to be subject to ongoing reviews, and we do a self-assessment every year in line with the standards. But also there is this requirement for the external assessment, and as you know, we had an external assessment that was carried out in 2017, and the next one will be due sort of early 2022, and to do that the actual review will probably be at the end of next year, 2021, so it comes around quickly. They're every 5 years, the external reviews. So we are just looking at that across heads of audit again across the Northwest to see if they can set up a peer review process again. The review, if it is scheduled in for the end of 21, the full year will be 1920-21, which will be a strange year to look at, obviously, in light of all the, you know, the reaction to the pandemic and the other work that internal audit have been doing. So that brings out the importance of that schedule I've included in the progress report that shows how we still managed to maintain our independence. So that was the main thing to bring to your attention. It includes our key performance indicators at Appendix A of the Quality Assurance and Improvement Programme. And again, I'm happy to take any questions.
Thanks, Jean. Are there any comments or questions, please? Thanks very much, Jean. We then go on now to item 13, the external auditors. Andrew, are you there?
Hi, Chair. Yes.
Yeah.
So I just wanted to give members an update in terms of the 17-18 audit. and also just to give an update on there was a question asked at the last meeting around the fee for the 17-18 objection work. I'm now in a position to update on that as well. So I'll start with the audit update, if that's okay, Chair.
Yes, please.
Okay, so if you take it back to the last meeting, we did highlight the conclusion of the 17-18 accounts audit wasn't necessarily a straightforward matter, just because the objection had been closed. There was a number of areas where we needed to update the audit effectively, given the passage of time. The good news is we have managed to close down most of those queries on the audit. So the vast majority of that work is now complete. However, the not so good news is there is an ongoing technical issue which has been outstanding for some time, which we've gone back to the council on again, and I do believe that technical issue may take a bit of time to resolve. That I'm not going to comment too much because I don't want to give a running commentary on audit issues, but it relates to the valuation of the options that the council held at that balance sheet date to buy shares in Redwood Bank. And then the other matter that has unfortunately delayed us a little bit, unfortunately, is due to the long-term absence of my audit manager, who's been ill for the last 2 months due to COVID and also some compassionate leave issues as well. That has delayed some of the work that we've been doing around the valuation of land and buildings. I am hoping that Chris will return in the next week or so on at least a phased basis, so hopefully we can start picking up that work. But I do believe that due to the technical issue that it may take a little bit more time to resolve that one, partly because the council needs to engage an expert as part of that work before we can do anything further. So that's where we are in terms of 17-18 audit. Happy to take any questions on that first of all.
Okay, thanks, Andrew. Are there any comments or questions on what you've heard so far?
Chair, could I ask Paul Warburton? We were told at the last meeting that they were going to be released very shortly, and I think Linton said that it would be within a week that we would get the accounts. I don't think this is really very satisfactory. Could you tell me if the issues that have arisen, are they ones that were originally identified or are they new?
Many of them are originally identified. There are a number where we've had to effectively update the audit because of the passage of time since we conducted the audit back in 2018. I guess just in response to the comment around it only taken a week, that is not nothing that we've ever stated, because we've always been clear that it would take a period of time to complete the audit and update it.
No, we were reassured at the last meeting that there was no issues and that the release was going to be imminent, and that was by Grant Thornton. So it is. Sorry,
I have to challenge back on that. That is not a comment. I attended the last audit committee. That was not a statement that I made.
So could you give us a reasonable estimate of when we may be able to expect these accounts, because we have been assured that they were ready to go?
Well, as I don't believe I've provided reassurance that they were ready to go. I mean, to be honest, I probably need to pass over to Linton, because the technical issue in terms of the valuation of the options in the bank is very much in the council's hands at the moment.
Would you like me to pick that up, Chair?
Sorry, who's that?
Linton.
Oh, Linton, yeah.
Yeah, I mean, perhaps just comment on the timeliness of the work. I think Councillor Warburton might be slightly confused in what I said last time as well. I think even I tried to say last time that we did understand that there would be items we still needed to go back on, particularly after the objection had been resolved, because we'd had almost 2 years worth of passage of time. During that period, there have been some changes in accounting regulations, which mean there are things we've now had to change in the accounts that we wouldn't have had to have done if the accounts had been signed off, if there'd been no objection back in the end of 2017-18. So that passage of time has actually caused extra delays at this stage. The outstanding technical issue is to do with how we portrayed what we believed was the value of our investment into Redwood Bank in 2017-18, when we had only invested £10 million. And the part that we've been discussing, and this has been being discussed for just over a year now, was how we value what the option was to proceed with the other £20 million worth of investment. I think there is an issue in that we haven't necessarily agreed with Grant Thornton on the way that we should have treated that, and we have proposed a couple of different ways of doing it, both of which Grant Thornton's banking experts do not agree with us. So what I've now agreed in the last couple of weeks is that we've asked Grant Thornton's banking experts to provide us with the way they believe it should be done, and we're now going to get an external person to actually come in and do that piece of work to validate it for us, and hopefully then Grant Thornton can go with that. I mean, Andy has heard me say this before. For me, and I understand why it has to happen, but it does feel a complete nonsense from a practical point of view, given that what the bank was worth in 2017-18 before we'd bought the last £20 million worth of shares in the bank, to me now feels immaterial, given that we have invested our full £30 million into a bank that's now worth over £120 million. But I understand from a technical point of view why we have to go back and do it.
So do we have any idea at all of when the accounts are likely to be released?
I guess until we've done that piece of work and Andy and his team are happy with what we've done on that piece of work, it couldn't be released. The quicker we can do that, hopefully everything else that they have been looking at will also have been done by that point, which will enable Andy to sign the accounts off very quickly after we've resolved that issue from our perspective.
So we haven't got an idea of when that will be.
I had a conversation with the bank earlier today about possibly approaching a particular firm that specialise in this piece of work. I guess if we approach them, it's understanding how much they'll charge us and how quickly they can turn that work around. I would hope that it's something that a specialist could do in a couple of weeks, but it might take a little bit longer, given that they're going back and looking at data that relates to how the bank was more than 2 years ago now.
Can I suggest, Chair? Oh, sorry. Can I suggest, Chair, that might need a minute that what was said at in the minutes of the last meeting was optimistic, because it does say 6 to 8 weeks there for the 2018-19 accounts.
That's the 18-19. We're talking about the 17-18.
Sorry, no, are we?
Yeah. Yeah.
I thought.
Yes, we are.
And the 18-19 can't be released until the 17-18 have been signed off.
Chairman, can I say something?
Once the 17-18 accounts have been sorted, the 18-19, I understand, is not much of an issue with those. They can be released.
Well, sorry, that's not quite the case. It won't be quite a quick succession. Once we've concluded the 17-18 audit, we will then move on to 18-19. Again, there's less issues to resolve on 18-19, thankfully. So it should be a relatively quicker process, and there's certainly less technical issues to resolve. But there are matters that we still need to resolve with the council, which we're only going to pick up once we're happy that we've concluded 17-18. So it will take a little bit of time. To
work has been done on the 18-19, though.
Sorry, say it again.
You have been doing some work on the 18-19 accounts.
We're in the audit is in a good position on 18-19, and there is actually less to update as such than compared to 17-18. So it should take less time.
Yeah.
I don't know if that's reassuring or not, though, because if it's a relatively less length of time, it could still be very considerable.
No, I don't think. I think there's certain things got to be checked. I don't think you're going to see another marathon like this one.
Chairman, can I say something here, Marks?
Yeah.
Yeah, I mean, we seem to have had so many false starts on these dates for whatever reason, whoever's been saying it. And it seems to me that I may be being unfair. We seem to have gone backwards this time compared to our last ACG, which is unfortunate because it sort of reflects not particularly well on the sort of the reputation for the council, and maybe indeed on the reputation for Grant Thornton. So, I mean, it is worrying. I understand how these things are difficult and we're waiting for people, but we still really have no idea whether we talk about 1 month, 2 months, 3 months, or next financial year. And it's all a little bit unsatisfactory. But I do understand the difficulties, but we do really need to resolve it. It's been going on for so long. And I thought also that from what was said before, that the 18-19 accounts, it was relatively straightforward. I'm now concerned that our audit is saying there's a little bit more to it than that perhaps we thought before. Thank you.
Okay. Do you want to move on to your second part now, please, Andrew?
Okay, thank you, Chair. So there was a question raised around the cost of the 17-18 objection at the last audit. At that point in time, I wasn't able to share that information with members, but I've since reviewed the cost and shared that information with Linton. So the cost of the objection for 17-18 was just over £65,000. About 2/3 of that cost is actually reimbursement of legal costs that we incurred as part of the audit, and I've shared the invoices with Linton to back that up. In terms of next steps, obviously we've communicated to that. We will, once we conclude the 17-18 audit, we'll formally report that to you in our financial report as well. And we will be taking the next step, which is to report that to PSEA, who ultimately review and approve any fee variations to the authority scale fee.
Right. Just to clarify there, Andrew, the 65,000 is cost so far.
No, that is the final cost of 17-18.
What about these external people bringing in to talk about the banking? Are they not going to be added?
Sorry, this is just in relation to the objection.
Well, oh right. So the external people about the banking is not in relation to the objection. No,
that's to do with the accounts audits.
Right. Okay.
So potentially there could be another £10,000 for the independent opinion.
I will be discussing the fees for the accounts audit with Linton at a later date, but I have shared an interim fee estimate. But I don't think it's appropriate to talk about that, given that the audit's still ongoing and we can't obviously the costs up. We are still incurring costs on the audit.
But again, given the interest of the public in how much this cost so far, can we then say to the public the cost of this objection is £65,000?
Yes.
And that could be issued then to the public if they ask?
Yes.
Yeah. Are you happy with that? Yeah. Okay. Thanks. Anything else?
Yeah.
Anything else you wanted to add there, Andrew, to your report?
No, just unless there's any other questions that members want to ask.
Okay. Do any members want to ask any more questions? And I'll take questions. I don't think we're in a position to take comments. So if anyone's got any specific question. Well, thank you very much then, Andrew.
No problem.
And that's it for that so far. Item 14 is the work programme. For members' interest, I have asked that before the end of the municipal year, we have a report on RIPA before we've not had a RIPA report. That's the reporting of what the hell is it? Investigatory Powers Act. In other words, it's the report on who the council has been investigating or watching. As you know, we've had them, I think, round about every 6 months previously, but we don't seem to have had one for a while. So are you happy with that we have one before the end of the municipal year?
Yes.
Yeah.
All right.
And that concludes our business.
Yes.
Yeah. Okay, well, thanks everybody for your attendance. That concludes our meeting. So can I wish you all a very good night?
Thank you.
Thanks. Thank you.
Okay. Well,